We have a gold reserve. Why do we have a gold reserve? It's certainly not to back the US dollar, because the US dollar is not backed by gold. So we have a gold reserve as a way that we have the ability to pay for things in the event the dollar would be somehow locked out of a market or fully debased. And so why would you have a Bitcoin reserve? Well, if countries start trading using Bitcoin for international settlement, or they use it as a reserve asset, the US needs to have an ability to affect those markets. And if the US holds enough Bitcoin, they can essentially either support or have a threat of attacking a market by using Bitcoin as a strategic weapon.
If the US adopts Bitcoin as a strategic asset, it could significantly enhance its global influence and drive Bitcoin's value to unprecedented levels. According to Fred Thiel, CEO of Marathon Digital Holdings, holding a substantial Bitcoin reserve would allow the US to influence Bitcoin markets and assert dominance. While this could raise concerns about Bitcoin's decentralization and government control, it could also boost Bitcoin's legitimacy and increase its value. Stay tuned as Fred Thiel shares more exciting predictions for Bitcoin. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Fred Thiel.
You have $100 billion of assets in US ETFs for Bitcoin. I don't think the US government would necessarily want to tank the price of Bitcoin and suffer the ire of all these investors.
Okay.
You have a substantial amount, a growing percentage of Bitcoin holdings in the world flowing to the US because of the ETFs. And I think that over time, it's going to be of strategic importance for the federal government to defend that in the same way that they defend the dollar and try and control oil prices. But it's interesting. You see the dollar is moving up, which typically would be a bad thing for Bitcoin. We're not going to see interest rates drop dramatically any further. We're just going to have to live with real rates somewhere in the 3 to 4% range, most probably, which means that people need to find assets that are going to drive returns that are above the risk-free rate of return. And there are not a lot of assets that do that effectively today outside of really equities and Bitcoin. And Bitcoin has been the best performing asset over the last 13, 14 years. So I think that you'll see more and more institutional investors own Bitcoin. You'll see companies start to own a little bit of Bitcoin. And over time, this number will grow. And the best thing that could happen is that it doesn't happen all at once. It happens slowly. It builds slowly. Because if it happens all at once, you get risk for high volatility. If it builds slowly, the system starts just adapting over time. The risk you have, though, is that, the whales become the ETFs. The government, sure, could be a whale, but the government never acts very quickly about anything. It's, the ETFs are very driven by the underlying shareholders, right? Who are the individuals who are buying shares in the ETFs. And so, public sentiment and emotional sentiment for Bitcoin will be just as important as public sentiment is for equities. The only reason for the government to try and buy Bitcoin from a miner is because they would want to buy Bitcoin that hadn't been in a wallet that may have been tainted at some point. Because miners are going to sell them at the spot price if they sell them, which the government could go buy in the spot market anyway. I mean, look at MicroStrategy. If anybody would have had a benefit of buying Bitcoin directly from miners, it would have been Michael Saylor, but he buys them in the open market because he knows miners won't sell them at a lower price. And most miners are hodling their Bitcoin anyway, like ourselves. So there isn't a lot of new Bitcoin going into the market. And, as every halving goes by, it's less and less. So I think if you look at investing in the equity of whether it's MicroStrategy or Amara or spot Bitcoin, it really depends on what the objective is. If what they want to do is hold actual Bitcoin, they're better off holding Bitcoin because they don't have control over what Amara or MicroStrategy do with the Bitcoin by being a shareholder. And I don't really foresee the Treasury Department ever being a shareholder in companies like that unless it was because of a major financial crisis and they were doing a bailout like they did with the banks back in the great financial crisis. However, I think people can look at proxies for Bitcoin like miners and like MicroStrategy, but ever since the ETFs have come, I think the interest in the miners being a proxy for Bitcoin has decreased from a pure Bitcoin perspective. If you look at our company, we are valued, if you use the similar multiple of how many Bitcoin company has on its balance sheet to its market cap from MicroStrategy and apply that to us, it would appear that the market doesn't value our Bitcoin mining business at all. They value our HODL. Right. Yep. So clearly there is kind of a misalignment in people's understanding of the business because we mine Bitcoin at a discount to spot as well as buying Bitcoin at spot, where MicroStrategy just buys Bitcoin at spot. So I think there's a transition happening in how people view miners. You have miners going down the HPC route, AI route, which is selling the future. We'll see how many of them manage to do that successfully. I think the CoreWeave strategy was a one-off. I don't think you're going to see other miners be able to do that successfully outside of Core Scientific. And then you have the pure play miners like ourselves, kind of CleanSpark and Riot, who are very focused on mining. We're different in that we also own energy generation. We owned a wind farm. We owned flare gas, oil field flare gas, where we generate electricity, all driving towards zero cost of energy. Because as a mining company, if our energy cost is zero, then we can mine no matter what the price of Bitcoin is. And we're not being stressed about having to upgrade our fleet all the time. Whereas if we're just buying energy off the grid like Riot or CleanSpark, then we have to every 3 years refresh our fleets, etc. So we're moving towards a different business model, which is much more long-term. And we'll see what those companies do, up to the next halving when things will get very different.
Thanks for watching. Please don't forget to subscribe for news and expert predictions direct to your inbox.